Good day, guys. Andrew here with your update. Today is March 31st, 2012, and I first want to start off with Mark Farber's, what he said. And he says that he thinks that we're at the beginning of a more meaningful correction. And I think me and this guy think alike. I really do. I do. And the reason why I say that is because, as I stated in the past, starting with the Nasdaq, when we hit 100% of wave one, we should see some downward momentum. And look at how many numerous attempts we tried to go above 100%. And then we just went down after that. We went down. So it's trying to find some support at the 78.6%. However, what does concern me is that when we look at the Dow, this is a very hard scenario to look at, because if we look at this trend line, this 4-hour trend line, this was from wave 2, the bottom of wave 2, all the way to wave 4, and we shouldn't have breached that, but we did on the Dow. This damn thing was breached, and so I don't know what's gonna happen. We didn't go 100% on the Dow just yet. We went around 50%. We found some resistance. We tried to break above that 1, 2, and I think it's trying to do it again for a third time. Will we break through it? I don't know. But what really concerns me is this right here. This never should have happened. This never should have happened. And tomorrow, Monday, the Chinese manufacturing number comes out. And if those numbers aren't good, this damn thing is going to go down a little bit more. I don't know. And so if the numbers are good, the Dow should go up. If numbers are bad, it's going to go down. Now, we already know that the Chinese manufacturing index is slowing down, but you know how, fucking China works. They pump up a bunch of BS numbers to pretend that everything's okay. And if we look at, the S&P 500, same scenario, which is, a good thing, because we have not breached this, this trend line yet from the third wave, or from the second wave to the fourth wave. We have not breached this yet, which is a good sign. And when I look at the Dow, I have to constantly keep reminding myself that it's comprised of 33 major stocks. And so, as long as the EXP 500, the Nasdaq, and the Russell index, as long as they don't breach this line, I think we're okay. I think the count is still intact. And I just think, these major markets, like the Nasdaq, the Dow, the Russell index, I think they're lagging behind. And so if you look at the Nasdaq, this thing could very well go up to 161.8%. It could be extended fifth. I have no doubt about it. I don't. And so if this is an extended fifth, then that's when all these other major markets that are lagging behind should hit 100%. And then that's when you want to short the position. And I still have my eye on this right here, SQQQ, which is a 3x triple leverage short position. And so I think this damn thing is going to go down even more if the Chinese markets for manufacturing are good. If they're good. Now, if they're bad, then I think a correction is underway, and I think this Mark Farber's guy is right. But I don't know if it's going to happen just yet, this meaningful correction. I do think it's going to happen. I just don't know if it's going to happen, if the start is going to be on Monday. I don't. I have to see what happens in China. And also with the silver market, what's the damn symbol for it? Oh, SI. What I'm currently seeing is that if we draw a regression line from here all the way to the bottom, we're just going back and forth. Nothing's happening. And I'm not going to react until this trend line right here is broken. So, we can see this part clearly is oversold. It bounced back, oversold here. It found resistance here on the middle of this trend line. But right now, I really think if you look at this right here, it's looking like a double top, and we should see, if the Chinese real estate numbers are bad, we should see one more down going forward. And to help support this theory, if you look at the dollar index, this damn thing just recently hit the resistance line again. And so, it went up a little bit, then it went back down, and it's trying to go up. And so the correlation between the dollar and silver is that if the dollar is strong, then silver and gold prices are weak. They're weak. They're weak. And so I think the best scenario going forward is that if the dollar goes up, if the Chinese manufacturing is bad, this will bring silver and gold prices down. And I still believe gold's heading down to 1550, at least. I think we still have some more crashes to come. And gold is doing the same thing. It's just trading in a regression line. I think it's doing the same thing. And so, it could go down to 1550. Then again, it may find resistance around 1600. Because we got to remember that if we look at the month chart for gold, it's been in this yellow trend line for a while. Ever since 2008, it's just going back and forth, overbought here, which could have started a new trend line. I don't know. That's why I have this purple in the loop. If I draw a trend line from here to there, to there. But right now, I think it's gonna find some heavy resistance once we hit the bottom right here around 1579. And if it goes any lower, gold can go all the way down to 1450. I don't know. But I think once it goes down to 1450, we should have a bull run going forward. And mark my words, if Obama wins the presidency for 2012, I think he's going to stimulate the shit out of the economy. I really do. And so I think gold's going to go up to new highs. Because there's no solution to the debt problems in Europe, in America. America is in $256 trillion in debt. The whole Europe situation, what they did was they created euro in the heyday so that neighboring countries in Europe wouldn't go to war with each other. And that was a big mistake. It's a big mistake. And so, there's no solution to it. There's not. So they're just going to keep putting money until the game's end. And this is my strategy. I'm not a financial advisor. I don't tell people what to do. I only tell you what I do. Once gold hits the bottom of around here or there, I'm probably going to make an investment. I'm going to ride the gold chain and the silver chain. Because we got to remember, interest rates are at almost 0%. And Bernanke said it was going to stay that way until 2014. And so I think the smart play right now is to ride the gold bubble. Well, I wouldn't call it a bubble just yet. It will eventually bubble up, but I don't think gold's in a bubble just yet. Ride the gold a little bit longer. When 2013 or 14, around that time comes around, pull out. The Fed will be forced to raise interest rates. Hopefully. I think that's the right move. I'd rather, crash the economy and save the dollar than vice versa. And then after interest rates go up and when the economy is crashed anyway, because it's going to happen, we should see a stronger dollar. Because you got to remember, when the last recession happened, the last depression actually happened back in the 1950s, all the commodities, everything in price went down. It went down. And this was when dollars and the currency was made and backed with silver because the coins were minted in silver. And so, this recession or depression is different. Whereas we just have too much money in the system. And so we're seeing hyperinflation. But I think in 2014, when the damn thing deflates and the dollar gets stronger and everything crashes, then I think this will be the right time to hold on to dollars and then go into the real estate market. I think, eventually the real estate market has to recover. It has to. It just can't stay down forever. I think right now the real estate market's a little inflated because, there's too much cheap money in the system, near zero, zero interest rates. And so that's what's probably holding it up by a thread. So when that goes down and when there's no more cheap money, the whole damn thing is going to collapse. And real estate, I think, will be the perfect investment. Of course, you might have to hold on to it for maybe 10 years, but I'll still be alive you know, around that time, hopefully. Hopefully. You never know what's going to happen in the future. You don't. And so that's your update for the markets. I hope you enjoyed this video, and please stay tuned for next week. Thank you for watching. Goodbye.